Hello everyone. A very good evening to all of you. Welcome to the MCQ session on the finance current affairs. A very good evening to all of you guys. Let's quickly start the session. So guys, today's session is a short session related to MCQs because we are having close to 10 to 15 MCQs only as of now. But I'll be discussing a very important concept at the end of this particular session, and that too with numerical. Okay, so video ke end tak bane rahiyega. Let's start the discussion. Okay, a very good evening to all of you. The very first question for today: the internal working group of the RBI reviewed the existing liquidity management framework to address the growing challenges in the volatile economy environment. Recommendations were made regarding the operational tools and the market responsiveness. You guys need to identify the incorrect statement from the following. Here we are having 4 statements. You guys need to identify the incorrect statement here. Okay, good evening Chetan, good evening everyone. The first statement: the internal working group recommends discontinuing the 14-day VRR or VRR auction as the primary tool to the bank hesitancy amid the volatility in the cash flow. Second statement: the IWG proposes weekly main operations supplemented by the fine-tuning tools. Statement 3: WSER should not remain the operating target as it is poorly correlating with the overnight rates. And statement 4th: activity in the call money market has increased partially due to widening of the interest rate corridor. So what do you think guys, which statement is or are incorrect here? You need to identify the incorrect statement. Okay, which statement is incorrect here? We are having 4 statements. You guys need to check for the incorrect statement. Good evening Mukund. The correct statement here will be option E. Both third and fourth statement are incorrect. Okay, third and fourth statement are incorrect. First and second are correct, third and fourth are incorrect. So the option here will be option E. Okay, option E is the correct choice. Next one: the RBI has recently released the Q1 financial year 2026 data on private non-financial companies, which reflected a broad-based trend in the corporate performance. Among the key metric, the year-on-year growth in sales was seen as a strong indicator here, right? By what percentage did the private sales of private non-financial companies increased year-on-year basis during the Q1 of this particular financial year 2026? By what percentage did the sales of private non-financial companies increased year-on-year basis? So Mukund, that report, I have already recorded a video on that report. So the major highlights of that report I have already covered it. Most probably the video will be out by Saturday or by Sunday. Okay, so just quickly watch that video, that will be fine. Okay, that's just a discussion paper. Okay, it's just a discussion paper. Still, I will advise you guys to watch that video. Few new things are covered in that particular video. Okay, so today only I have recorded that video. It will be out by tomorrow or maybe day after tomorrow. Okay guys, the correct choice here will be option C. 5.5% is the correct choice. Okay, option C, 5.5%. Next one: SEBI has revised its compliance timeline for the stockbrokers in regard to submission of the half-year certificates. This change aims to bring the uniformity and ensure timely reporting by the intermediaries. As per the new guidelines, within how many days from the half year ended 31st March must the certificate to be submitted? So stockbrokers who are availing the pledge facility, are required to submit a net worth certificate, right? So let's suppose if the timeline of the half year 31st March ended, what is the timeline for the half year ended 31st March? We have discussed about the two timelines. First was related to 30th September and the second one was related to 31st March. The correct choice is 60 days here, right? 60 days is the correct choice. One was 45 days and then this one is 31st March related was 60 days. Okay, next one. As per the recent data released by the RBI regarding the performance of the private corporate business sector, there was a comparative analysis of various sectors. Which sector showed the highest growth in the assessment? Which sector showed the highest growth in the assessment? Which sector showed the highest growth in assessment? Yes, it was the service sector, that too non-IT related service sector. Okay, non-IT related service sector. Next one. India's infrastructure sector is developing through the index of 8 core industry, ICI, which accounts for a major chunk of the index of industrial production, IIP. In July 2025, this index recorded a moderate year-on-year growth. What was the year-on-year growth in infrastructure output as per the CIC for July 2025 month? Yes, Mukund, the IT sector is not performing as of now well because of the US tariffs and situation of the policies in the US. So that's why there is quite disturbance as of now in the IT sector, though we have seen in the past as well, and I feel that things will be fine soon. The correct choice here is option C, 2%. Okay, option C, 2%. Next one. The Indian government has planned to create a new exchange platform to bring transparency and better pricing for specific commodity. This platform is expected to serve as a central mechanism for national trade. This is important and very, very simple. Mineral Trading Exchange. Mineral Trading Exchange, right? To align with RBI's cybersecurity framework and to ensure robust IT system, a public sector bank has been asked to, all the banks, not just the public sector bank, all the banks have been asked to complete the technology migration progress related to the domain names, right? Which one is the first public sector bank in India? Which one is the first public sector bank in India to complete its domain migration as per the latest announcement? Yes, Punjab National Bank. Option E is the correct choice. And do remember, companies, NBFC companies also need to do the migration, and the domain name for them is fin.in, right? Fin.in. Please do remember that. High chances that one question can come from this particular news. Next one. The NPCI has decided to phase out a certain UPI feature earlier. This decision aligns with improving the transaction efficiency, but recently NPCI has discontinued the UPI P2P collect request. So what do you think, guys? From which date NPCI will be discontinuing the UPI P2P collect request? Very good evening, Bhakti. So guys, today's session is a very short session. I'll be taking just 10 to 15 MCQ questions. Why? Because इतने ही MCQs हैं जो पिछले वीक की न्यूज़ से आ सकते हैं as per my understanding. Okay, but we'll be covering a very important concept at the end of this session as well. Okay, I'll be teaching you a very important concept at the end of this session. Guys, can you just quickly confirm if I'm audible or not? I think the video started buffering at my end. Can anyone just quickly confirm? Okay, perfect. I don't know why there is some issue maybe at my end. Okay, thanks for confirming, guys. So here the correct choice is option E. Okay, option E, 1st of October 2025. Okay, 1st of October 2025. Next one, the Reserve Bank of India recently expanded its studies beyond the urban areas. What is the primary purpose for the Urban Consumer Confidence Survey and the Rural Consumer Confidence Survey? UCCS and RCCS. What is the primary purpose of conducting these surveys? Urban Consumer Confidence Survey and the Rural Consumer Confidence Survey. A very general question, right? It's a purpose oriented question. Directly you can judge by having a look at the option. Yes, option D, to assess sentiments and expectations of the household, right? Option D. Next one, the Urban and the Rural Consumer Confidence Survey conducted by the RBI gathers responses from multiple households. Economic indicators are also considered in this, plus these include the current and the expected trends. What type of information is primarily collected in this survey? What type of information or data is primarily collected in these surveys? What do you think, guys? Current and the 1 year ahead data is considered here, right? Yesterday only we discussed. Next one, as part of the disinvestment strategy, the government of India has appointed a prominent investment banking firm to manage the stake sale in multiple public sector banks. Can you guys name that particular entity which has been appointed by the government of India for the prominent disinvestment strategy? That's a prominent investment banking firm. Yes, Goldman. Perfect, Goldman. Option C. And the last question for today, though the question is last, still the session is not ending, because we will be learning one important concept. Whether you are giving PFRDA, whether you are giving RBI, whether you are giving SEBI, it doesn't matter. This concept is common for all of you. Okay, so do let me know later on the correct choice for this particular question. Okay, it's related to a new AI native digital bank, which is the first AI related bank. Okay, so later on let me know in the comment section what do you think is the correct choice here for this particular question, right, in the normal comment section. And today what we are going to learn here is capital asset pricing model. Okay, capital asset pricing model, CAPM model. Guys, before starting the discussion related to capital asset pricing model, and we'll be definitely doing a practical question of CAPM as well. Before starting the discussion, would like to tell you that there is a positive relationship between risk and return. There is a positive relationship between risk and return. That means if the risk is going up, the return expectation is also going up, right? So risk and return always go hand in hand. Now, what do you mean by capital asset pricing model, CAPM? Very important for any exam that you are giving. CAPM is a financial model used to estimate the expected return two banks are in front of you, Yes Bank and HDFC Bank. You are putting 1 lakh rupee each in shares of Yes Bank as well as the shares of HDFC Bank. I'm talking about the equity share capital, right? I'm talking about the equity share capital. You guys tell me in which bank you will be expecting a higher return because you are taking a higher risk. In which bank there is a high risk, so you are expecting a higher return? HDFC Bank or Yes Bank? Tell me in the comment section. Aditya Yes Bank, Mukund HDFC Bank. Okay, what about others? What about others? Bhakti HDFC Bank. Okay, guys, do you even think that HDFC Bank as of now is having any kind of risk, considering the systemic importance of HDFC Bank, the size of the HDFC Bank? Okay, so let me just give you a homework. If you are not giving PFRDA, then definitely take this homework. After this class, check out the sales of top 10 banks, private sector banks in India. Check out the profitability of top 10 private sector banks and have a look at the profitability and sales of HDFC Bank. It's a systematically important bank, right? 3 banks are systematically important: SBI, HDFC, and the third one is ICICI. So if you are investing 1 lakh rupee in HDFC Bank, I think your money is quite safe as of now. However, Yes Bank is quite volatile as of now, right? From past 5-6 years, I can say it's quite volatile, right? So I can say that there is a high risk if you are investing in Yes Bank, right? If you are investing in Yes Bank, there is a high risk. In order to compensate for that high risk, don't you feel that you guys will be needing a high return, right? Why somebody will invest in Yes Bank if better banks are there? Obviously for the sake of return. If the risk is high, then the return should also be high. Now, how I have computed this? Through the basic risk and reward equation. Can I quantify it in terms of number, in terms of percentage? Yes, I can quantify it by using the CAPM model, by using the capital asset pricing model. How to quantify it? Let's get the discussion started. The first thing is there are 2 types of risk: systematic risk, which is also called as undiversifiable risk. We cannot diversify it. It is systematic, it is inherent. Everyone in the market will be facing this risk, right? Second one is the unsystematic risk. This is specific to a particular company, or it can be specific to a particular industry, right? And this is diversifiable. Let's suppose I have bought one share. I have just bought share of Reliance Industry. Share of Reliance Industry. I was having 1 crore. I just went to the market. I placed order of 1 crore shares of Reliance, 1 crore rupee worth of shares of Reliance Industry, right? Don't you think that I am taking a risk? Yes, because I didn't diversify. I could have done that. Let's suppose invest 25 lakh in Reliance Industry, 25 lakh in HDFC Bank, 25 lakh in some other share, and so on. So can I say that I am exposed to the risk of non-diversification? I haven't diversified. What if things go south with Reliance Industries? What if Reliance Industries starts going down? I'll be exposed to this risk. This is an unsystematic risk. Not everyone is facing that. Only those companies, only those people are facing this risk who are holding the share of Reliance Industry. That is unsystematic risk. But what about COVID pandemic? It is a systematic risk. What about the 2008 Lehman Brothers crisis, financial crisis? It is systematic risk. What about recession? Systematic risk. It is not at all diversifiable, right? It is not at all diversifiable. Now let's try to discuss about the CAPM. CAPM. What we are actually doing is we are just trying to compute the expected return. What should be my expectation? Let's suppose if I'm earning 12% in HDFC Bank, what should be my expected return if I talk about Yes Bank? Yes, Mukund. CAPM formula. Let's try to practically understand the formula of CAPM. This shows the expected return. This shows the expected return. The very first thing in the formula is a risk-free return. Risk-free return. Even if I don't take any kind of risk, even if I invest in government bonds, even if I invest in FDs, at least I'll be earning 6%. At least I'll be earning 6%. That's the bare minimum. So that is a risk-free return that every investor is expecting if he is investing in stocks, if he is investing anywhere else. कम से कम 6% तो आना ही चाहिए उसके माइंड में, इससे बढ़िया तो FD करवा लेता, राइट? उतना भी नहीं आ रहा है तो लेट्स गो फॉर अ FD. So that's the bare minimum criteria. Another thing is beta. What do you mean by beta? It measures the asset's volatility. Asset volatility relative to the market volatility. Let's suppose Nifty increases, HDFC Bank or Yes Bank, they are also increasing in the same way. Can I say that their beta is related to market? Their beta is resembling the market beta. Let's suppose Nifty, an index, a market index, increases. However, Yes Bank is going up sharply in response to the increase in the index. So can I say that beta is nothing but how much your security volatility is there as compared to the volatility in the market? मार्केट के चेंज होने की वजह से आपकी सिक्योरिटी में कितना चेंज आने वाला है, आपके शेयर में कितना चेंज आने वाला है, दैट इज नथिंग बट बीटा, राइट? नेक्स्ट कॉन्सेप्ट इज रिस्क प्रीमियम. We denote it by writing RM minus RF. What is RM? Market return. Market return. If I invest directly in the stock market, let's suppose Nifty, then I'll be generating a return of 12%. Then I'll be generating a return of 12%. So I can say that if I invest in the directly stock market, Nifty index, I'll be able to generate a return of 12%. But I was already generating a return of 6%, that too risk free. So what is my risk premium? If I'm going in the market and investing my money, I was already getting 6%. By investing in market, I'm now able to earn 12%. That means the difference is 6%. That's my risk premium. What do you mean by risk premium? This is the benefit of taking a higher amount of risk, because you have invested your money in stock market, which is actually risky, right? Which is actually risky. So can I say that you are easily able to earn 6%, but because you invested your money in stock market, you are earning 12%. So you have taken a risk, and 6% differential is the premium for that risk, is the premium for that risk. Now let's discuss about the formula of CAPM. Your expected return from Yes Bank, your expected return from Yes Bank should be risk free return. 6% तो आना चाहिए ना. You are already earning 6% in bank, at least that much तो आना ही चाहिए, plus risk premium. Plus risk premium. You are earning 12% from the stock market directly. If I invest in Nifty, I'll be earning 12%. However, I was already earning 6%. So I can say 6% is the effective premium that I'm earning because of investing in stock market. However, as of now, I'm investing in Yes Bank. इतना तो स्टॉक मार्केट में इन्वेस्ट करता तो भी मिल जाता ना, इतना तो स्टॉक मार्केट में मिल जाता तो भी मिल जाता. सीधा स्टॉक मार्केट में इन्वेस्ट करता निफ्टी में तो भी 12% तो कमा लेता. बट आई हैव इन्वेस्टेड इन येस बैंक, सो डेफिनेटली इट इज सब्जेक्ट टू बीटा. सर व्हाट डू यू मीन बाय बीटा? अरे मार्केट 12% से बढ़ रहा है तो क्या तुमको भी 12% ही चाहिए क्या? और डू यू वांट मोर बिकॉज यू हैव टेकन अ रिस्क? You have taken a risk by investing in Yes Bank in a direct security. If you had invested in market directly, you won't have taken much risk. But because you have taken a risk in HDFC Bank, and let's suppose if the market moves by 100 point, the Yes Bank moves by 200 point. So can I say that the beta of this security is twice as compared to the market? Market beta is always 1. Market beta is always 1. If the market is increasing by 100 and share price of Yes Bank is increasing by 200, can I say that the beta of Yes Bank is twice as compared to the market? So if the market is increasing by effectively 6%, adjusting for the risk-free rate, ideally the Yes Bank should move by 12%. Plus I was already getting 6% in the bank. So my expected return from Yes Bank is now 18%. ये समझ में आया कि नहीं आया? पहले इतना कमेंट सेक्शन में बताओ, फिर ही न्यूमेरिकल क्वेश्चन करेंगे. पहले ये बता दो इतना समझ में आया कि नहीं आया. आर यू गाइज एबल टू अंडरस्टैंड दिस मच? Thank you so much, Bharat. We always try to make the sessions valuable for all of you, right, by covering each and everything in an engaging way. So thank you so much for that. सबको आ गया? नहीं आया? ओके. क्या समझ में नहीं आया भक्ति बताओ? क्या समझ में नहीं आया? देखो समझना, फॉर्मूला समझना. RF, this much तो I am already investing in as a risk free rate, let's suppose in bank FD. This much is my risk premium. I am taking a risk. This much is my risk premium. Let's suppose in stock market I am getting 12%. However, risk free rate तो 6% मिल ही रहा था ना, तो effectively can I say that by investing in market I am gaining 6%, net 6%, right? Net 6% I am gaining. But because I have invested directly in the security Yes Bank, which is having a beta of 2, so if additionally 6% I'm getting in the market, can I say that in Yes Bank I'm getting twice? Why? Because the beta of Yes Bank is twice as compared to the market, right? So can I say that I have an expectation here 12% plus 6%, so I must get in the bank FD itself. So that's a risk free rate. रिस्क फ्री कितना कमाऊंगा? 6%. मार्केट से ऊपर कितना आ रहा है? 6%. पर मैंने तो स्टॉक में इन्वेस्ट किया है, सो आई एम एक्सपेक्टिंग अ हायर बीटा बिकॉज मार्केट अगर 100 से बढ़ता है, सो मेरा स्टॉक 200 से बढ़ता है. दैट मीन्स मेरे स्टॉक का बीटा ट्वाइस है एज कंपेयर टू द मार्केट. अ वेरी बेसिक फॉर्मूला. और ज्यादा क्लियर हो जाएगा जब एक बार क्वेश्चन कर लेंगे, ठीक है? जब एक बार क्वेश्चन कर लेंगे. अच्छा सर, बीटा का क्या रोल रहता है? देखो यार, मार्केट का बीटा हमेशा 1 होता है. मार्केट का बीटा हमेशा 1 होता है. अब अगर आप येस बैंक में पैसा लगा रहे हो तो हो सकता है इसका बीटा 2 हो. HDFC बैंक में लगा रहे हो तो हो सकता है इसका बीटा 1.5 हो, राइट? ऐसा पॉसिबल है. हर स्टॉक का बीटा अलग हो सकता है, ठीक है? हर स्टॉक का बीटा अलग हो सकता है. Now let's try to do a question and understand this concept in a practical way. Given that the risk-free rate is 3%, so can I say that they have directly given us the risk-free rate 3%? ये बैंक FD वाली रेट हो गई, गवर्नमेंट सिक्योरिटीज वाली रेट हो गई. The market return RM Nifty 50 return is 11%. Which of the following firm or firms had the best performance? So we are having firm A. You can even take stock A, right? B and C. Firm A is giving actual return of 10%, firm B is giving an actual return of 11%, and firm C is giving an actual return of 12%. Here are the respective betas. So guys, I'm just giving you 1 to 2 minutes. Can you tell me in which firm you guys are interested? Which firm is having the best performance? The first thing is I need to check my expectation. What is my expectation with firm A, with firm B, with firm C? And how can I come to know about my expectation? CAPM. With CAPM, capital asset pricing model, I can easily check my expectation. What should be my ideal expectation? So if I know my CAPM return for A, B and C, then I need to compare it with the actual return. What actually the firm is paying? What are the actual return? If the CAPM returns, let's suppose, is 8%, but actually the firm is able to generate 10%, then definitely it's a high performer. It's even crossing my expectation. It's even crossing my expectation, right? What is the formula, guys? CAPM, expected return, RF plus RM minus RF. That is the premium I am expecting, multiplied by the beta. Multiplied by the beta. So let's try to one by one determine the expected return of A. 3% is the risk-free rate, plus what is the risk premium? RM 11% minus RF 3%, right? Multiplied by the beta 0.8%. Please calculate. Please calculate for A. Then B, 3% risk-free rate plus RM minus RF multiplied by the beta. For C, 3% plus RM minus RF multiplied by the beta, 1.2. So for the A is 11 minus 3, that means 8. 8 multiplied by 0.8 beta, it will be 6.4 plus 3%. It is 9.4%. That's my expectation. What about B? What about B? What about B? 11 minus 3, 8 multiplied by 1, again 8% only, plus 3%, that means 11% for B. What about C? Again 11 minus 3, that gives me 8. 8 multiplied by 1.2, 9.6 plus 3%, 12.6%. That's my expectation. That's my expectation. So I'm just writing my expectation CAPM return here. For A, I am having an expectation of 9.4%. For B, I am having an expectation of 11%. For C, I am having an expectation of 12.6%. My expectation was 12.6%, but the stock only delivered 12%, rejected. My expectation was 11%, the stock delivered ditto 11%. Can be accepted, but it didn't outperform, right? This is not an outperformance. This is at par with my expectation. So this is not the best performance as of now. Try to understand the word. It can be better, right? 9.4% is my expectation with A. However, A have actually outperformed. A has given me a return of 10%, right? So the correct choice, the best performance is of firm A. Firm A has given the best performance. Why? Because it has outperformed my expectation. सर एग्जाम में हम इतना सारा कैसे करेंगे, राइट? इसमें तो बहुत सारी कैलकुलेशन है. अरे भाई कुछ नहीं है, फॉर्मूला देखो, RF प्लस RM माइनस RF मल्टीप्लाइड बाय बीटा. एक बात बताऊं, पूरे फॉर्मूले में सिर्फ एक ही वेरिएबल है, बीटा. बाकी पूरा फॉर्मूला वही है. जो तीनों में लगेगा. The formula is the same for all the three, just the beta needs to be changed. So what you can do is RM minus RF. First calculate that. 11% minus 3%, that means 8%. Now what you need to do is you just need to multiply 8% by the respective betas, right? By the respective betas, and then you just need to, whatever the resultant is, you just need to add the risk-free rate in it. That's it, right? Hardly it will take 40 to 45 seconds if you are good with quant, right? So that's about CAPM, guys. It shows us the expected return. Please do remember, what happens is, because of the stress of the examination, we forget that it shows us the expected return. This doesn't show us the actual return. It's not at all showing us the actual return. It is an indicator of expected return. What should be your expectation? What should be your expectation, right? So that's all from my end for today, guys. Thank you so much for watching the session. This is a new concept for most of you guys, okay? So, and very, very important definitely for the examination. You can expect a theory question as well as a practical question. Anything can come up in the examination, whether it's RBI, whether it's SEBI, whether it's PFRDA or any examination. If you are having finance in your course, definitely then CAPM is also in your course, okay? So thank you so much. Bye bye. Take care. Good night. मिलते हैं अगले सेशन में.